Everyone thinks offshore accounts are illegal. They're not, and that's the problem. November 2017, journalists obtained 13.4 million leaked documents from Appleby, a law firm specializing in offshore structures. The files revealed how politicians, celebrities, and corporations legally, but often quietly, moved money through shell companies, trusts, and jurisdictions like the British Virgin Islands, Panama, and Mauritius. The leak didn't expose crime. It exposed a system designed to be legal. Exhibit 1: the structure itself. A person or corporation establishes a shell company in a low-tax jurisdiction. That entity doesn't manufacture or sell anything. It exists purely on paper. Income flows in from one country, gets routed through the shell, and emerges in another with minimal tax liability. No laws broken, no regulations violated, just architecture. Exhibit 2: the names. The Paradise Papers identified sitting politicians in multiple countries who'd used offshore structures. Celebrities with endorsement deals sheltered income overseas. Sports figures, royals, and corporate executives, all operating within legal boundaries, yet sheltered from public scrutiny. The surprise wasn't illegality, it was scale and candor. Exhibit 3: why it works. Tax law is territorial. A U.S. corporation earns profit in the Caymans. The U.S. only taxes it when money returns home. Delay repatriation indefinitely, and the tax liability suspends. The system doesn't punish this, it permits it. Accountants and lawyers didn't invent loopholes, they navigated the ones legislatures built. The feedback loop: wealthy individuals and corporations fund political campaigns. Elected officials craft tax policy. Policy preserves the very structures that benefit their donors. The system perpetuates itself not through corruption, but through aligned incentives. Everyone operates legally. Everyone profits. What made the Paradise Papers significant wasn't revelation of illegality, it was exposure of opacity. The structures themselves predate the leak by decades. Applebee's clients weren't breaking rules, they were following them to their logical endpoint. The papers simply made visible what the system had always permitted. The leak changed almost nothing legislatively. Enforcement remained sparse. Tax rates stayed competitive between jurisdictions. The structures persist because the incentives persist. Understanding this requires abandoning the assumption that wealth avoidance is hidden or criminal. It's often systematic, legal, and predictable. This video is for educational and informational purposes only and is not financial advice. Always do your own research. If you want to understand how financial systems actually work, not how we're told they work, subscribe for a new breakdown every week. This video is for educational and informational purposes only and is not financial advice. Always do your own research.